Welcome everyone. This is Jimmy, your favorite NLP coach. Today, I'm going to talk about trading psychology. I'm going to talk about being right or making money. And I'm going to talk about someone who's sometimes interfering in your trading performance. I'm going to talk about your ego. Before we're going to proceed, here are some words of our very respected sponsor. Milk Metaverse is a metaverse platform for the media industry that will bridge the gap between the content producers and the audience. Mediaverse from Milk Platform will be a combination of virtual reality, blockchain technology, and artificial intelligence. Visit the website metaverse.milk.global. Thank you very much, ladies and gentlemen, my respected audience. I am Jimmy. I would like to introduce myself a little bit. I am sure most of you know me, but some of you don't know me, and some of you who know me don't know everything about me. So let's give me you a quick introduction of who I am. So I'm with the Burp Nest. My main focus within the Burp Nest is actually to help people with trading psychology and trading mindset. I'm a certified NLP master coach. I have a background in positive psychology, and I combine hypnosis and neuroscience to help people out with their trading struggles, but also to help them with becoming a better trader from a mindset point of view. For me, it's really important to help them because it helps to serve one of my core values, which is servitude. I think like one of my core values that brings me closer to actually my real core soul is to help people. So basically, for me, it's a double win-win situation. Before I'm gonna proceed, I have some rules, and I am sure if you're gonna follow these rules, I am pretty sure that you will evolve to the next level. I mean, life is about rules, just like gravity is a rule, right? You cannot beat gravity. But I also am sure that you cannot beat some certain logical ground rules. And let me explain them. You are here for a reason. You are here perhaps to lift up your trading performance, or to lift up your trading confidence and your competences. So I just want to highlight, just listening to me, it's not going to work. It's not going to work at all. Listening to anyone else, it's not going to work. Consuming is really important. But what I am expecting from you, ladies and gentlemen, is to be proactive. Proactive is the only way to evolve. But being active, it's not enough. At the end of the day, you're going to take actions, because just knowing stuff and knowing and not doing is the same as not knowing. And maybe you could remember yourself when you had the opportunity to lock in the profits back in October and November, and you knew locking in these profits is a good thing, but you didn't do. So not doing what you know comes with an extremely high price. And one of the prices is not evolving as a trader and a human being. So again, guys, you're going to consume, one, you're going to be active, two, you're going to take action, three, and you're going to go in, you're going to evolve. Those who are not actually consuming and being active here are going to kick you out, maybe, or maybe not. So guys, let me know also in the comments where you're from. Where are you watching this live stream from? I'm now here in the Netherlands. It's really dark. It's 6 o'clock. It's already dark in the Netherlands around 4 o'clock. It's not really my favorite season, the winter, but it is what it is. So let's talk about mindset. We're going to talk about mindset. We're going to talk about trading psychology. And I want to start with this quote from Mark Douglas. And I'm sure most of you guys, you know him, Mark Douglas. I pretty much agree with all of his stuff, maybe some of his stuff not, but that's my own personal preference. But I do totally agree with this statement. If your goal is to trade like a professional and be a consistent winner, then you must start from the premise that the solutions are in your mind and not in the market. It's not in the market. It's mainly in your mind. Your mind is basically your core edge. If you don't have that edge in place, you're going to make a lot of mistakes. You're going to make a lot of mistakes. Listen, I'm not the one who's telling you trading psychology is everything. No, because you need some certain essential skills, some competences. And I see trading psychology and trading mindset as the binding, as the glue, as the binding material that keeps everything together. Like you have these bricks, right? And then you place cement, and then again bricks, and then you get a solid foundation. So I see the cement as the trading psychology. If you don't have the trading psychology and everything is in place, I'm just going to give you one push and you're destroyed. It's easy as that. So trading psychology is extremely overlooked, but I am really honored that I'm able to talk about this. If you like this live stream so far, please give it a like. I'm very sure that you know where the like button is. I'm pretty sure you can click the like button with your eyes closed. So give this a like. So there are some key takeaways I want to share with you. I often see people, especially on crypto Twitter, and I also want to say, like, you should be also a little bit careful with crypto Twitter and to take everything with a grain of salt. One of the key misconceptions I hear about and I see and read about emotions is emotion is your enemy. Well, I would say emotion is not really your enemy. Emotion is actually you. It's actually a biological expression that triggers your brain. It triggers to think, it triggers to fight, it triggers to freeze, and it's basically trying to tell you something. I often tell people I see emotions as a big ball. And imagine yourself in a swimming pool holding this ball and trying to keep this ball underwater for a long time. Maybe for 1 minute, 2 minutes, you will succeed. You will keep the ball underwater. And then finally and eventually it will pop out of the swimming pool. And that's actually the same with emotions. The emotions are not there to be suppressed. Emotions are there to be listened to, not act upon the emotions, but listen to, and then try to manage and reduce the volume of the emotions, if this makes sense. Trying to fight emotions comes with a hard price, guys. The price is not thinking rationally, being tired all the time, and three, you're actually ignoring a biological expression of yourself. By the way, every live stream in this during this Congress till Monday, every day we're gonna do giveaways. We're gonna do a lot of giveaways. And today we're going to do a giveaway as well. So somewhere on the screen, you're going to see a secret code. Remember that code, go to the description. There's a Gleam URL, and then you can make yourself eligible for a really nice giveaway. Every day, there are multiple giveaways, so enough chances for you. So to talk more about emotions, there are a few core emotions, where they call them like the basic emotions. It depends on the school, the thought of school you're used to, but in psychology, there are like 5 or 6 basic emotions: fear, anger, sadness, happiness, disgust, love. And basically, all these other emotions are derived from the core emotions. I don't see them as an enemy. Everyone who's saying that they see their emotions as an enemy, they basically see themselves as an enemy. The emotion is a biological expression, but sometimes emotion and the emotional arousal is really high. For example, you're really angry, or you're really fearful, or you're disgusted with the market, especially with the FTX collapse. Me personally, I lost money in FTX. I lost actually my entire Link and Litecoin back. Not gonna lie about that. I used it as collateral to trade some products on FTX. So to go back to emotions, the first week I was basically identifying myself with emotion because the emotional arousal was really high. So when the emotional arousal was really high, you need to understand what it does with you. It triggers your brain, and you have a beautiful brain. All of us, we have a beautiful brain. There's no stupid brain. There's no how do you call that, a strong brain or a beautiful or a weak brain. Like, we all have a brain, but the way you use your brain determines how much you take out, how much productivity you will create in this world. So when the emotions are really high, especially negative emotions, because we experience negative emotions 3 times more than a normal emotion. Think about it. You're walking on the street and someone gives you a really nice smell. And you walk on the street and then another person gives you a really nice smell. And there's someone else give you this really angry face. These two smells, these two positive experiences, they just gonna fade away just because just one of the bad experience you had. That's how the brain works. We are more sensitive for negativity than for positivity. So in trading, it means our amygdala gets triggered. So we have two amygdalas on both sides of the brain, left and right. And when they are get triggered, a lot of things are actually happening in our body. So in short, their fight, flight, and freeze modes gets activated. So when that gets activated, your frontal lobe, like your forebrain, that's actually, see it as like the CEO of your brain, gets basically less power because you're in a really emotional state. So to come back to emotions, the first week when the FTX shit happened, I I was the emotion itself. And I know when to trade and when not to trade. And I think all of you guys should know when to trade and when not to trade. When I identify myself with a really negative emotion, I'm done. I'm done for the rest of the week. I don't trade. Now, and this is the difference, I I am not the emotion, but I feel the emotions. I'm still disgusted about FTX, but I'm not like the disgust emotion, if you understand what I mean. I just feel this disgust. And so you can see the entire cycle is filled and packed with emotions. And all of these emotions, they have an impact on your trading decision process. You should know that, and I'm sure you know this. But you should also know what kind of impact does it create. So later on, I'm going to talk about some biases. But let me ask you first, where are we in this chart? Or more importantly, where are you in this chart? Because these two questions are different questions. Ask yourself, where are you in this chart? And where is Bitcoin in this chart? I would like to see some comments. Otherwise, I'm going to kick you out from the chat. That was a joke, by the way. So as we can see, we see thrill and euphoria and belief. So belief is something good, right? You believe in something, then there comes the thrill and then the euphoria. So what happens when there's a lot of euphoria, a lot of things are happening. Herd bias kicks in because it's not only you who is euphoric, but the let's say the majority that's really euphoric. So everyone wants to be a part of what, of the trend. So there's not much selling liquidity, right? There's like the sentiment is really high, nobody's selling. So what happens, the trend is overly crowded. So when that trend is overly crowded, herd bias kicks in, but also recency bias kicks in. What happens then is the most recent activity on the Bitcoin chart, or I don't care, another chart gets more information and a higher weight than what happened like months ago. So when recency bias kicks in, what do? You think in higher targets. So people are going to scream 100K, 120K, it's going to be 150K, 200K. And that's already a big warning sign. Later, I'm going to talk about a timing model, how you can determine when to buy and when not to buy. And this is actually work from Ned Davis, really smart guy, but that's a topic for a few minutes later. So again, there are some facts and some universal rules, right? The one I just explained, you should consume, be active, evolve, learn, otherwise nothing will happen. Another fact is you need to have a vision, because if you don't live by a vision, of the future, you'll be left with what? With what you normally do. So ask yourself, what does normal brings me in trading? Maybe not much. If it is not much, then you need to have like a different vision and have a plan. I think one of the reasons why so many people failed is they had no plan. They really, they buy and they just hodl for a long time without thinking about locking in the profits. So there's no plan. If there's no plan, there's no execution. If there's no execution, you will be left with what? With what you normally do. And I hate to say it, but 90% of people, they just don't succeed in trading, or at least in forex trading. I think the figures are around 85 up to 90%. It differs from research to research, but the majority fails in trading. One of the reasons, mindset, but it's also your trading methodology and having a plan, just like the basic stuff. And ask yourself now, and I want to see some comments in the in the comments box, is how would your P&L have would look like if you had a plan of taking profits? You have executed that plan. I would like to see some comments about that, guys. And it's like another beautiful saying, what got you here won't get you there. It's actually planning. Listen, if I'm sick for a week, and normally I do the scanning on a Sunday or the Monday, but I haven't scanned the market, I normally don't trade much, because planning is a crucial element of trading. Not gonna lie, like planning and scanning the market is something I maybe from everything that has to do with trading, like analyzing, journaling, planning is the thing I don't like. I kind of dislike, to be honest, because it's kind of boring, to scan the market to see what's happening, and sometimes I just scan without having a good trade setup. So planning is something I don't like a lot, but I do understand and I realize without a plan and without scanning the market every week, I don't have an edge. You have to set your alerts, and you should know also high time frame or long term or trading or investing. You need to have a plan. Without a plan, you're gonna have a hard time. But listen, guys, let's talk more about ego, and let's talk about being right or making money. Just checking the chats. Depression. Yeah. Yesterday I was talking with Big Chats about, depression and the bottom. My personal opinion is like the bottom is in, and a bottom takes a long time, really a long time. The bottom is in when people perceive this as a bottomless shithole. And I think this is true. The moment people think this is bottomless, then most likely, if you if you would apply the contrary opinion, things they will shift from up. It will shift. So talking about Ned Davis, American financial analyst. I'm talking now Dunglish here. And he wrote something nice, and it was also part of the CMT course I did. He said there are two types of investors, be they large or small: those who don't know where the market is headed, and those who don't know that they don't know. So basically, everyone doesn't know, and those who think they know, they just don't realize that they don't know. And that is if that's you, and I think that's the majority, maybe not you specifically, but then you have a big handicap. Ned Davis, he made a lot of money a long time ago, but then he lost all of his money, and I was thinking, why made I so much money and then lost it and gave it back to the market? So this guy does a lot of reflection, and a lot of reflection, and a lot of reflection. He came up with some let's say conclusions. One is he failed in cutting the losses. So when people are in euphoria, and as you know, When you're in euphoria and things go down, you're getting directly in a denial state. You're actually denying that things are going to decline. That's very normal. That's human behavior. When this happens, also loss aversion kicks in. We don't like to lose. So losing something, money or status or a product or something you possess, your phone, is 3 times stronger than gaining the same thing. For example, if you're trading and you lost $100, psychologically, like mentally, you need to make $300 to make up to compensate the mental pain. So when things are going down, people, they have that, like, the false hope that things will reverse, so they don't need to take to accept the loss. And admitting where you're wrong is extremely important. It's maybe more important than knowing where you're right. And he improved his system totally 180 degree by using a timing model. And I will explain later what this model was, because I think you guys can also apply this model to your own trading methodology. So another reason why it's so difficult to cut losses and to have like a contrary opinion, especially when everyone is euphoric, it's because hurt bias and recency bias and confirmation bias kicks in. 3 different biases, they kick in the same time. And I will also explain this later by using a NLP communication model. But to come back to the work of Ned Davis, he had some key elements that helped him to become a better trader. And I believe if you apply these 4 key elements, it will also help you. 1, have objective indicator. And believe me, I don't care what kind of objective indicator you use. OBV, in my opinion, it's an objective indicator. Using MAs, objective indicator, because it's computed. An RSI or MACD, I see that as a objective indicator. And then if you have determined what kind of objective indicators you want to use, have discipline. And then be flexible. The problem with trading is you need to be, on one side, really rigid, really strict. And on the other side, you need to be flexible. Flexible also with your bias. People find it really difficult, especially when the emotional arousal is really high. And that's why I advocate to listen to your emotions without identifying yourself too much with it, so you can bring it back to a lower volume. Is to be it's going to help you with being flexible and going from bullish to bearish, or from bullish to more neutral. And another problem I often see with traders is I'm bullish or I'm bearish. It's so binary. People often forget that most of the time the market is actually, but it's ranging. There's a lot of consolidation in the market. And when that is happening, I don't think you should have a really strong bias, because that high time frame bias, especially if it is extremely strong, it can affect your low time frame bias. And another key element is risk management. If you think this makes sense, let me know, and I will talk more into depth about these 4 key elements, because I truly believe these 4 key elements, they can change your whole confidence. It's going to change your confidence level, and you're going to tap into your real competences. Because we know that people, they lose money. When people, they lose money, what happens? Confidence makes a lower low. When your confidence makes a lower low, a lot of things are going to happen neurologically. But what also will happen is you will not be able to tap into your competences, like your full competences. So to boost your competences, I always say your confidence, you need to work on your competence. So read a book, and especially if you're kind of burned out, take a step back. Don't trade. Or maybe like do nothing trading related, and then come back when you feel better, and then read the books, watch the videos again, and do a lot of back testing. Work on your flexible thinking. We know now we need to have a lot of flexible thinking. Because if you're married to one bias, you have a handicap. If you're married to your back, you have a handicap. So you want to avoid that. Who knows about NLP? I know something about NLP. I'm a NLP master coach. But I'm really curious. Do you guys see more? Do you guys know more about NLP? I know there's a lag, so I will wait a little bit. NLP stands for Neuro Linguistic Programming. I see it as could see it as a way of life. I see it as a way of, I see it as a coaching methodology. I use it very often. And this is a really simple NLP communication model. And before we move forward, I want you to understand this. We tap into this world through our five senses. And one of the NLP presuppositions is the map is not the territory. The map is not the territory. And I will explain this by going a little bit deeper into this NLP communication model. Everything we see, everything we hear, everything we taste, everything we sense goes through filters. So we basically delete, generalize, or distort information in such a way that it fits our biases. And these filters are often like your personality characteristics, the values you have, your beliefs. So it could be like your religious belief, but also your belief system, your belief how the world operates, the belief you have about yourself as a trader, the belief you have about the market. I coached a lot of people, and I know that most of them, when they're struggling, they have self-limiting beliefs or beliefs that are not helping them or serving them in the trading journey. For example, especially when people make a lot of, like, they're repeating themselves in making mistakes, they call themselves, oh, I'm stupid. I'm a bad risk manager. I'm not able to take profit. You see what I do? They identify themselves with the negativities. If you identify yourself with these negativities, what happens? The things you see around you in the world, like the charts and everything, it goes through your brain through filters, and then it deletes and generalizes and distorts it in such a way that it fits your beliefs. Decision and memories, especially painful memories, are also extremely strong filters. So we tap into the world, we distort, generalize, and delete information. So that's also where your biases are happening. And then consciously and subconsciously, we create a internal representation. We create like the map of the world. And this map of the world creates, again, a state, how we feel about things. And the state you are in will, again, will impact your body. So people, for example, if you're really fearful, you're going to sit like this. Or when people are, in shame, things will happen with their body. So your body will change, and you will act upon your state, and your behavior, again, enforces your state. You want to break this. Yeah, I truly believe what you believe, you become it, negative or positive. It's like what Henry Ford once said, like, if you believe you can do it, then you can do it. If you believe you can't do it, well, you can't do it. It's actually as simple as that. But this explains most of your biases. Okay, to circle a little bit back to Ned Davis, he has 9 rules. And I think you should follow these 9 rules as well. Is 1, don't fight the tape. The tape is another word for what? The tape is another word for the trend. You don't want to be a trend fighter unless you see that the trend is overly crowded and you wait for confirmation. If you want to see and know and understand what kind of confirmation I use, let me know, and I might show you it on the Bitcoin chart or any other chart. Don't fight the Fed. It's stupid. You don't want to fight the Fed. Fighting the Fed is like, if you have this in mind, just know that fighting the Fed is not wise to do this. It's stupid. Don't fight the Fed. Don't be a Fed fighter. And you want to be aware of the crowds at extremes. So this comes again back to like point one, don't fight the tape. But if the tape is overly crowded, it's extremely crowded, and people are really euphoric, then what should you do? Be careful and check with your risk management. Rely on objective indicators. I cannot tell you what kind of indicators you should use. But like my general rule of thumb is like if you're not really familiar with indicators, try to learn some like the indicators in general. So what's actually a momentum indicator? What is a volume-based indicator? What kind of indicators do you use to determine a trend? And have a general understanding and master one or two indicators. You don't need much more than that. One, two, or maybe even three indicators, and integrate them in your trading system. And use them as, especially as a timing model, as a timing tool, not so much as a tool to go long or short, or to buy or sell, but as a timing tool. Discipline. And I want to talk about discipline. There's a lot to say about discipline. I'm not sure if I can cover all of this. If I can't, I'm going to promise you I'm going to do part two. The other rules is risk management. Remain flexible in your bias, but also remain flexible in what the market is giving you and feeding you. I don't think it's good to be too flexible, but I also don't think it's good to be too rigid. So there needs to be a balance, and ask yourself, am I really too rigid or too flexible? Do I change too quickly when I'm in a trade or in an investment or not? Have money management rules, know when to take profit. I cannot emphasize this enough. What helps for me is to rebalance. I have Bitcoin, Ethereum, altcoins, and USDT. That's actually like you can categorize my crypto assets in these four things. USDT. If I see that my crypto, so let's say like USDT is it's not 25% anymore as it initially was, and it's now, let's say, 10%, and Bitcoin grew, and Ethereum also, and the rest also, I rebalance from time to time, especially in a bull market. It helps me to what? It helps me to take profit. I think it's important to have a good USDT or stables, USDC, whatever you want to use. I'm not here to advise. I'm not a financial advisor, but I personally make sure that the ratio between stables and Bitcoin, Ethereum, and alts are balanced, and I rebalance from time to time. If this makes sense, let me know. If it doesn't make sense, I want to hear as well. So don't fight the tape. You always want to go with momentum. I cannot, emphasize this enough. You don't want to be a trend fighter, but sometimes the trends are overly crowded. Tell me how you determine a overly crowded trend. I'm really curious. I think we have a lot of brilliant people who are taking themselves serious and trading serious. Let me know. By the way, if you like this content, please give us a like. Give us a like. We do this free of charge. My wish is that this is going to help you and to boost your trading performance, but also your trading confidence. It's never too late to come back. People, they think, oh, shit, I lost money. We're in a bear market. I can give up. Don't give up. Don't give up, I would say. It's okay to take a step back. Take a step back and then take 3, 4, 5 steps forward. But don't give up. There's no reason to give up. Maybe next time I'm going to tell you something about my personal wrecked story and how I came back. And I know a lot of other people, they came back. If you want to come back, you just don't want to give up. It's not the time to give up. The best time is actually now to boost yourself and to learn. So you don't want to fight the Fed. So it's for you important, even if you don't think it's really interesting, do it. Have some basic understanding of the dollar index, the S&P, but also have a good understanding of interest rate. What is it actually? What is it actually? Interest rate. What does it do? If the interest rates are really high, what do people? What do commercial banks? What do they do with their money? What like retail? What do we do with our money? Also understand the inverted yield curve, meaning you get more yield for short-term treasuries than for long-term treasuries. Ask yourself, if this is happening, what does it tell you? You should. I'm not gonna spoon feed you here. If you want to know the answer, you can ask me, tag me on Discord or on Twitter. So you don't want to be a fat fighter. You also shouldn't be, or I think like most of you, it's okay to, you don't need to, visit their websites and to read everything about the Fed, but understand what the impact is of interest rates. What do they do? Interested. Oh, I made a spelling here. Interested rates. Interest rates. Make sure you understand what the effect is of interest rates and how this affects the dollar and the stocks. So crowded extremes. Crowded extremes. You will. I think it's one commonality of every bull market or the end stage of the bull market is trend gets overly crowded. So the extremes, you find them in the bottoms and in the tops. I do believe in the contrary opinion, but not on both sides, not both ways. And let me explain. If things are going up and everyone wants to be part of the trend, and herd bias kicks in, and maybe you know or maybe not know why herd bias kicks in. Herd bias kicks in because we love to be part of a big trend and a big community. It makes us feel safe to be part of a community, a big community. And having a contrary opinion, we are actually wired in such a way that it's not going to feel good. Many years ago, maybe some centuries ago, not that long time actually, when you were not part of the herd, you will be left alone, and then alone against other tribes, animals, thieves, criminals. It's hard to survive on yourself, all by yourself. So that's actually where the herd bias actually comes from. You want to be part of something big, of a community. We are wired in such a way. We want to be part of a tribe. But this need, this desire, is not always going to serve you. So I do believe in the contrary opinion when the things are going up. So the magazines are talking, hey, Bitcoin is going up, it's going to make 100K, everyone is bullish, even I'm bullish, and I'm shouting from the rooftop, hey, Bitcoin is going to 200K. If you see this and you see like the same stuff on the newspapers, on television, on the radio, understand that this is one of the signals of a overly crowded trend. And then it's okay to have a contrary opinion. Plan-based, you execute. Plan-based, you execute. You can have a contrary opinion. However, a contrary opinion when the market is going down and is dumping is less reliable than the other way. So when everyone is, let's say, for now, for example, or let's go a few months ago, nobody thought, okay, Bitcoin would go to 20K, because everyone thought it was to go to 20K. So people, they will front run this massive collective bias. What happened? I mean, Bitcoin just pierced through the 20K and went down as low as 15.8K. So the contrary opinion to the downside is not as reliable as the contrary opinion to the upside, if this makes sense. If it doesn't, let me know. If it does, also let me know. Be active, guys. I like active, proactive people. It's one of the prerequisites of how do you say that? Someone with success in his life. We are actually a little bit over time. If you mind, let me know. If you don't mind, also let me know. I want to say, when, especially with investing, also with trading, don't rely on your gut feeling. I know there's intuition. I use my intuition as well, but it doesn't has a lot of weight in my trading decision making process. So I try to rely on non-emotional evidence. For me, I'm gonna reveal it. Is I do use the RSI, but I think I don't use the RSI as how most people use the RSI. I could do a live stream about how I use the RSI and how the founder of the RSI used the RSI. I've never seen it on Twitter, for example, how he used RSI. And I think the way how he used RSI is, it just makes completely much sense. And yeah, test your indicators. Ask yourself, when was the last time you tested your indicator? When was it? And when was the last time you practice with your indicators to to skill out or to skill in, and how consistent are you with it? I mean, I cannot answer this question for you. It's really something you need to do, and this is why discipline is so important. I also want to explain here a few things, and let me first take a sip of my delicious water. In trading, you don't only need discipline or self-discipline, you also need something else, and that's self-control. Self-discipline, self-control, not the same thing. And again, let me explain. Self-discipline is all about doing the right stuff. It's all about doing the desired behavior. Self-control is all about not doing the bad behavior. Two completely things, two different things. I believe that self discipline requires less willpower than self-control. Self-control, it means you need to get rid of a bad habit. But having a bad habit, it means you have repeated something many, many times. So what's happening then is your brain is creating a neural pathway. And this pathway is really strong. The more you do that certain behavior, the stronger it gets. And the stronger it gets, the harder it is to dismantle the bad behavior. So a bad behavior can be replaced by a good behavior, but it requires a lot of discipline. Like my general take on discipline is you need to understand your discipline leakers and understanding when not to trade. I know when not to trade. I gave you already an example with the FTX collapse. I did not trade. Um, I know when I'm tired. That's often after 10 o'clock p.m. or 11 o'clock p.m. I don't trade because it blurs my critical thinking, my decision making process. Even though I have a system, I still use intuition. I'm not a mechanical trader. I know that trades I take after 11 p.m. they don't often turn out into they don't turn into good trades. I also know when I'm surrounded by my lovely kids, I don't trade. If I have some problems with my family, or I had a really nasty discussion with my wife, which doesn't happen that often, um, or with my neighbors, I just don't trade because I know that different areas of my life, for example, family, health, even my diet, my relationships, they can affect my trading decision making process. So know this, and also understand your discipline leakers. For example, when I'm too long on social media, for example, this is for me a discipline leaker. So what's happening when this is happening? Like my discipline is leaking, literally. It means I find it difficult to obey my own system, to abide by my own system, to listen and to act upon my own system. So understand your discipline leakers. Um, I think let's wrap up. I want to see questions as well, guys. If you have questions, um, drop them in the comments. I'm more than happy to help you out. And again, we're doing this completely free of charge. This is not something you will hear from others. I think this is pretty unique content. If you appreciate this, give it a like. Just give it a like. I really appreciate this, especially now with Thanksgiving. Give thanks, and my opinion, it should be every day Thanksgiving. Always give thanks. My personal opinion is people who are they show gratitude and they thank for the things they have. They will only get more of that. Um, we know that risk management is important to keep your losses small. It's actually easy said, difficult done, because we always create this mental story in our head, like, hey, it's going down, but what if it reverses and then I miss out? Cut the losses. Like, be a champion in cutting your losses. If you are a champion in cutting your losses, you gonna edge out, I think, 80% of all traders on crypto Twitter. Losers make big mistakes. Winners make small mistakes. So be a good be a good loser, actually, uh, in such a way that you just take small mistakes. And if you take small mistakes of small losses, it's basically mathematically really hard to go bankrupted. If this is what you tell is there's a question, will you tell about your wrecked experience? Yeah, there's a lot to tell, Sultan, but honestly, I've been wrecked hard. I mean, a lot. An exchange did an exit scam, ICO scams. I had this mining contract. So another company was mining for me, cloud mining. They shut down their services. The market tanked. I basically was in well, not in debt, but like my entire money was like, it was gone. It was gone. But I made a comeback. Unfortunately, this is a little bit out of the scope of this session, but I would love to tell you next time about my wrecked experience, because I am sure this will help other traders to feel more confident. Please allow yourself to feel more confident. Again, about the flexibility, shift your bias, guys. Like, shift your bias. Don't marry your bias. It goes the same way for low time frame trading, high time frame trading. It's okay to shift your bias. So how to shift your bias? It's really simple. I think TradingView talked about it today. They did a thread. Set alerts. It's simple as that. If this happens, if the RSI is crossing this level, or if the MA is making this cross, I'm going to consider, or at least consider, to shift your bias. And then again, you need to have a trading edge that helps you to invalidate your thesis. If you don't have a point of invalidation, you don't know where you're wrong. If you don't know where you're wrong, you will continue going to make mistakes and mistakes over and over and over again. Ned Davis, guys. If you are able to buy his book, please buy his book, Being Right or Making Money. One of his rules was also like, buy the hype, sell the news, let your winners run, cut your losses. I think people do exactly the opposite. So when the market is going down, hey, what they do is they let not their winners run. They close their winners to lock in money, and they let their losses go and let it run to go, so it can go into deeper losses, not with that intention, of course, but that's what's happening. It's because of the negativity bias, and the loss aversion kicks in, and confirmation bias kicks in. We just explained to you guys about NLP communication model. It's hard to fight against those biases, but this is a universal rule. It's like, being active, consume information, evolve. It's a universal rule. Another universal rule is, let your winners run, cut your losses. I mean, and be proud of cutting your losses. If there are questions, let me know. And by the way, we're gonna do a giveaway. There is a giveaway. There's also a giveaway secret. Pay attention to the slides. It will appear on the slides, and go to the Gleam URL, fill in some of your details, and you will be eligible for a really nice giveaway. I have a poor memory. I can't really recall it what it was, but I know that I was excited about that giveaway. Go to that giveaway. So again, guys, this is his own word. Those who do not study history are condemned to repeat its mistakes. And that's why I said, like, if you don't have a vision of the future, you'll be left with a vision of the past, meaning you're going to repeat the same behavior over and over again. A few days ago, I think yesterday or Tuesday, we did a live stream with JJ Cycles. He's into the cycles. I believe if you understand cycles and the cyclicity of the market, this could give you an extra advantage. It helps you to it makes it easier to determine a potential bottom or a top. So cycles, having a good understanding of cycles, is actually a good idea. Like, you shouldn't know, like, there are a lot of books about cycles, and some of them are really complex. But just having the basic understanding of cycles will give you a good edge and good advantage. I highly encourage you guys to understand cycles. So again, guys, your ego, try to keep it in your pocket. What you should know, your ego is actually there to protect you, but the ego is not serving us when it comes to trading. Sometimes you do see some crap about ego, that you should kill your ego. Well, I will tell you this, it's impossible to kill your ego. It's maybe the other way around. The ego can kill you, but you cannot kill your ego. Your ego is also a biological, it's one of your biological, it's a self-esteem. It's a part of your biological system, part of your nervous system, a part of you. You cannot beat your ego, but you can lower the volume of your ego. What your ego often does is, especially when it comes to money, is when you make money, what happens then is your ego gets a boost. When you lose money, your ego goes down. You need to get rid of this narrative. Your ego should go up the moment you're investing in yourself and learning and respecting your risk management, your trading principles. Your ego should go kind of not really down, but it should affect your ego a little bit. It should trigger your ego when you don't abide, if you don't follow your trading rules, if you cannot cut your losses, if you cannot let your winners run. This should do something with your ego. That's the whole thing, guys. Detach yourself from the P&L. It's easy said, difficult done, but really this helps a lot. Detach yourself from the P&L, because the moment you focus too much on the P&L, a lot of things will happen in your brain. A lot of biases will kick in. We talked about a lot of biases today, and a lot of poor decisions will be established if you just focus on your P&L. It's okay to focus on your P&L once in a while, because it's one of the metrics you use. You're not trading to have really to go bankrupt. Of course, you're not trading to have a red P&L. You want to have a green P&L, but overly focused on your P&L will shift the focus from your P&L and not from your trading behavior in the process. So again, guys, I really appreciate all of your. I appreciate your presence here, and I really appreciate the questions and the likes. If you haven't gave us a like, hit the like button. I'm pretty sure you can even do hit the like button with your eyes closed. I'm pretty sure. Just try it. maybe gonna shut down the computer. Maybe it's not a good idea. So again, guys, being right or making money, or maybe more important, protect your money. Let your winners run. I already said it, but it's not that easy. It's not that easy. Buy the hype, sell the news, um, and go back to the rules I talked about not fighting the trend, not fighting the Fed, not fighting your ego, not fighting your emotions. They are there to be managed, regulated. You cannot fight them, they will destroy you. It's easy as that. Have objective indicators, be disciplined. If this was too much, which I can understand because I already talking, we're over time, 15 minutes, but I don't want to leave you guys in the dark. You can rewatch it again. If you have questions, I'm always available in the Discord. We're having this Congress, 7 days long, with everyday live streams and giveaways. You can tag me with your questions, and I'm more than happy to help you. And you also can reach out to me on Twitter. And it's not too late to join the Congress. There's tomorrow's lineup is really good. Saturday's lineup, I'm not gonna give you any spoilers, but it's also really epic, and the giveaways, they are really, really generous. So guys, give this video a like, and happy to talk with you in Discord. Bye bye.